What is good, YouTube? Charon FX back. Hey man, listen. So in this video, I'm about to show you how I was able to catch over 100 pips trading GBP AUD. Alright. So if you really want to learn how I did it, make sure you stick around to the end of this video. If you're also interested in enrolling my one-on-one mentorship, just DM me on Instagram. The link is in the description below. DM me at Charon FX to get yourself enrolled. Alright, if you also haven't yet subscribed to this channel, make sure you hit that subscribe button, make sure you hit that like button, make sure to drop a comment down below. So with that being said, let's just get to business. Alright, so now starting from the 4H time frame, right? Like I always say, the first thing we need to do is to identify the trend of the market. So looking at our chart, what trend are we in? We're in an uptrend. You get me? Good. So after we've identified our trend, what's the next thing we need to do? The next thing we need to do is identify our market structures. Alright? So now let's get into the chart and let's identify our market structures together. So starting from here, what the price do here? Price created what? A new higher low. Alright, after this higher low was created, what the price do next? It went back up to create what? A new higher high. Why is this a higher high? Because this high is higher than what? That of its previous high. You get me? Good. After this higher high was created, what the price do next? It came back down to create a new higher low. Why is this a higher low? Because this higher low is higher than that of its previous higher low, or because this low led to the formation of a new higher high. You get me? Why is this also a higher high? Because this high broke above its previous higher high, or because this high is higher than that of its previous higher high. So after this high was created, what the price do next? Price came back down to create a new lower low. You get me? Why is this a lower low? Because this low broke above its previous higher low. So now this becomes a new lower low. You get me? After this lower low was created, what the price do next? Price came back up to create a new lower high. After this lower high was created, what the price do next? Price came back down to create a new lower low. Why is this a new lower low? Because this low is lower than that of its previous lower low. After this lower low was created, what the price do next? Price went back up to create a new higher high. Why is this a higher high? Because this high broke above its previous lower high. So now this becomes our new higher high. Alright. After this higher high was created, what the price do next? Price came back down to create a new higher low. Why is this a higher low? Because this low is higher than what that of its previous low. You get me? Good. After this higher low was created, what the price do next? Price created what? A new higher high. Why is this a higher high again? Because this high is higher than what that of its previous high. After this higher high was created, what the price do next? Price came back down to create a new higher low. Why is this a new higher low? Because this higher low is higher than that of its previous higher low, or because this higher low led to the formation of a new higher high. Why is this also a higher high? Because this high broke above its previous high. You get me? Good. So now from the structures we've identified, we can see that price was creating a series of higher highs and higher lows. Therefore, price is in a bullish trend. You get me? Good. So after we've identified our market structures on the 4H time frame, what's the third thing we do? The third thing we did was to go down to a lower time frame to look for our entries. Alright. So now let's go down to the H1 time frame. So I show you how I was able to capitalize on this 100 pip move. Alright. Alright. So now coming down to our H1 time frame, right? We already know from the structures we've identified where we are in a bullish trend. Alright, we already know from the structures we've identified we are in a bullish trend. Alright. So now this is our retracement, right? So this is price retracing. You get me? So after I saw price retracing, all I did was to take my trend line and connect from point A through to point B, right? All I did was to connect our structures using a trend line. So this is point A, this is point B. Alright? So after I connected our trend line, what else was I also looking for? Remember, in an uptrend, what key levels are we looking for? Or in a bullish trend, what key levels are we looking for? We are looking for resistance to become a support. What did I say? We are looking for a resistance, or we are looking for resistance to become a support. And in a bearish market structure, what are we looking for? We are looking for support to become a resistance. So since this is a bullish market structure, we are looking for resistance to become support, right? So then I take my rectangle tool and mark my key levels. So what do we have here? We have support, resistance. Price broke out of this resistance, right? So after price broke out of this resistance, what are we waiting for? We are waiting for price to retest it as a what? As a support, so we can continue back to the upside, right? Good. So after price retested our resistance, as a support, what was the next thing I was looking for? I was looking for a bullish confirmation candlestick to confirm that, okay, price is ready to push to the upside. All right. And looking at our candlestick formations right here, what do we see here? We see a morning star candlestick formation. So a morning star candlestick formation consists of 3 candles, right? A bearish candle, a doji, and a bullish candle. Or we also have 3 white soldiers. So basically, the 3 white soldier candlestick confirmation consists of 3 bullish candlesticks. Right after a bearish candlestick, 3 bullish candlesticks will follow. Again, so right after this bearish candlestick, what do we have? We have our first bullish candlestick, our second bullish candlestick, and our third bullish candlestick. Again, so after we had this third bullish candlestick, that's when I entered the trade, right? Placed my stop loss right below the wick of this bearish candlestick, and I'll take profit to this level, right? I'll take profit to, I think, 1.95700, yeah, which gives us a risk to reward ratio of 1:4. 1:4. Again, risking 28 pips to make 117 pips. Alright, as simple as that. In case you didn't understand anything I did, go back and rewatch the video to understand. And like I also said earlier on, if you're interested in enrolling my one-on-one mentorship where I teach all these things, just DM me on Instagram to get yourself enrolled. Alright? If you also haven't yet subscribed to this channel, make sure you hit that subscribe button, make sure you hit that like button, make sure to drop a comment down below. So with that being said, I'll see you in the next video. Ciao and FX. Peace. I'm out.